Hello and welcome to another update video about AGIX. Yeah, the break of the last low forces me to reinterpret the chart because the previous lows were broken, and even though it's still holding the 17.9 cent level, which was a support on the previous chart and the previous FIBs I had on the chart, it seems to be more respecting here the 15.8 cent level. And I did redo the chart a little bit. Basically, so far, it hasn't given us any indication that it has bottomed. So the forecast is still for lower prices at the moment because the move up here, as you will remember, was at best a diagonal. So we always need to be on the side of caution. With these diagonal structures, they can easily fail. As you know, that was not an impulse, specifically warned about that. Now, it has come down a little deeper, the 50% Fibonacci retracement based on this structure now. I'm counting 3 waves up only, yeah, in this interpretation of the chart, which means it could still be bullish, but it needs to hold the 50% Fib level. Basically, that 15.7 or 15.8 cent level for me is a decision point between a more bullish interpretation of the chart, where it could turn around here, rally in a 5th wave, or a bearish interpretation where price could just have rallied in an ABC structure into the February highs and is now coming down in what I have here, a 5-wave move potentially in a wave 1, and then could rally still afterwards in a wave 2. So as soon as we have a lasting low in place, or at least some kind of a low, at the moment there is no evidence for a low. Yeah, I haven't got anything. There's nothing. It's just a few green candles. So, I mean, surely there could always be a low, and if you're looking for a long trade, you can always go long with a stop below the low, yeah. But I haven't got the structure that would suggest that we're going from here. This can of course develop, and then I would pay attention to potentially a wave 5 rally, which would be a 5-wave move, or a wave 2, which would be an ABC rally. So it would still be probably a decent rally, but resistance would then be around, measured against the last low, yeah. Resistance would be all the way up to 49 cents. So, I mean, it could still rally considerably, but I would then pay attention to this area between 32.5 cents and 49 cents. Yeah. So, I mean, generally, even if we break below 15.7 cents, don't think this will just go downhill in a straight line. I would still then look for a rally because we are oversold on various time frames. 4 hour, 8 hour, yeah. But first of all, I need some kind of a setup on the shorter time frame. At the moment, there isn't anything, even on the daily oversold, yeah. But it's if we break below 15.7 and start a rally from there, maybe at 11.1 cents, because that's the next key support that we have on that chart. If it starts from there, I would rather emphasize the expectation it's only a 3-wave rally. If it rallies from here, I would still look for a 5-wave rally, which could lead to a new high. Yeah, and it not only found support here at the 50% Fib level, also where the previous 4th wave is. So this is kind of strong support. So ideally it's turning around here, but I would have to say, basically we are in a good situation here because you've got the 50% Fib level. We're very close to support, and below the last low, it's likely going to invalidate this wave 4. Then I would primarily look at the yellow wave count. So this is the pivot point, the decision point between a bullish and bearish interpretation of the chart. When do we get a first signal that the trend is shifting to the upside? It would probably be a break above the last swing high. I've got already the dashed line here, so it would be above 22.4 cents. That is the last swing high. If we break above that level, that's also when the sell-off started, the sell-off candle that we had. Let me just zoom in a little bit here. Volume, it's already there. Oh, 1 second, let me type. Okay, so I need to go to the smaller time frame, go to the 30-minute chart. So yeah, it's basically up there. It's actually, it's not even, oh yeah, we had 3. So it depends on what time frame you're looking at. If you're looking at the smaller time frame, it might already be above this swing high at 19.4 cents. That would be an early signal that the trend is shifting to the upside. A more reliable one, though, would be, yeah, I would go with 22.4 cents. And obviously then could rally in, let's say, the bearish interpretation still into resistance. The problem is corrective rallies can always be a bit shallow. So, and if it is an ABC structure that's moving, then I will not really be able to calculate a target for the C wave until I have waves A complete and the waves B. Then I can calculate a target for the C wave. As soon as I have A, I can also give a target for B. That's how it works. And generally now a rough target for the wave 2. But it's more like a resistance because corrective rallies can be very shallow. Still though, a corrective rally should definitely go above 22.4 cents, or it would still be part of this move to the downside. Huh? That's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.